Come on. 7 basic. Hello again, everybody. Hello again, everybody. Hopefully you all can hear me now. Not sure what happened, but you know, things happen. So you gotta move through them. So I was going into 7 principles why, or 7 basic principles that every trader should know, because these things will help you have a long career in trading if that's what you choose to do, or if you just want to make some extra income on the side. These principles are tried and true, and these principles will win every time. These will keep you from losing money. These will keep you in winning trades. They'll keep you in winning trades longer, and they'll get you out of losing trades faster. Because all of these things are tailored to help you remain consistent. And that's what you want. You want consistency. Consistency is the key to trading. Like I said before, being consistent. It's not how much money you make, it's how much money you can keep in the stock market. Because the markets don't care about you, they don't care about me, they don't care about who I am, they don't care about who you are. They simply care about price, because price is king in the stock market. Don't let anyone else tell you otherwise. The most important thing in a stock is price. That's what all of the big boys, the hedge funds, the big banks, all of the organizations that move the markets primarily up and down, they care about price. They don't care about anything else other than price. Up and down. So, let's get into it. So I won't keep you all that much longer. Let me run down those principles again. Principle number 1, proper preparation prevents poor performance. Number 2, hard work. Okay. Number 3, being patient. This one's key. Number 4 is key also, having a detailed trading plan. Having a trading plan is like having a roadmap, okay, for trades. Number 5, discipline. You have to have discipline. It's just like working out. If you want to see results, you have to remain disciplined in what you're doing, even when it doesn't look like it's working. You got to stick to your plan and remain disciplined. Number 6, communication. And number 7, replaying your important trades. What does that mean? That simply means this: every successful trade that you've made, you want to go over it and see why it was successful. And you want to duplicate that in your next trade. Meaning you want to look for stocks that duplicate how you won in that, first trade or that second trade or the previous trades. So let's go back to number 1. Proper preparation prevents poor performance. One could say that I was not properly prepared tonight when my mic went down. But hey, we're working on it. We'll live through it. You push through. So as far as trading goes, what does that mean? Proper preparation prevents poor performance. That simply means this. Okay? Know your daily support and resistance levels. Know your daily and support and resistance levels. The reason you want to know that is because you want to know where price will potentially have trouble going, where price will particularly have trouble getting past. So if price is trading at $10 and you think it'll go to $10.50, you want to know if there's resistance from $10 to $10.50. And you want to know that beforehand. You don't want to get into a trade and have to try to figure that stuff out on the fly, because you'll get killed. So it's important to know your support and resistance levels up front. Okay? Know your daily supply and demand zones. What do I mean by that? Supply and demand, that's how the market operates. When there's more buyers and sellers, demand is high, prices go higher. When there's more sellers than buyers, supply is high, price goes down. You want to know where those areas are. If you're buying from an area where there's more buyers than sellers, okay? You want to know that. Because if you get into a trade and you have more sellers than buyers, you're in an area of supply, but you're expecting the price to go higher, guess what's going to happen? Guess what's going to happen? You're going to lose money. And no one's in trading to lose money. I know I'm not in trades to lose money, so no one likes losing money. It's inevitable, but you want to minimize the amount that you lose, and I'll get to that. Okay. Know the short interest. This is important as well. What's the short interest in a stock? What is short interest? Short interest is basically in any stock, or in a lot of stocks, I won't say any, in a lot of stocks, you can do what they call shorting. That's where you borrow shares from the brokerage house with the anticipation for that share value to drop in price. And the difference between the price that you borrowed it at and the price that it drops to, that difference is you get whatever dollar amount that is per share. So you can track from a percentage standpoint how high or low the number of people who are shorting the stock, because that tells you, that can essentially tell you what a lot of people think about the fundamentals of the company. Now, it's not to say that, a high short interest is an accurate assessment of how negative the fundamentals are on the stock. But all in all, that's one of the things you want to know, because you can have what they call a short squeeze. If you don't know what a short squeeze is, everybody look at GameStop. That's what a short squeeze is. And when you know the short interest in a stock and you want the price to go up, and you have factors in your favor that will force the price up, that will cause what they call a short squeeze. So that's why it's important to know the short interest, because that can that can essentially be the difference between making 20% or 120% on whatever you put into the market. Next is the current or recent news. What is the current or recent news on a stock? That's another thing that you want to know before going into a trade. That's part of properly preparing. Is there a news catalyst on the stock on that day or on a previous day that can bode well for the stock price? Okay. Case in point, Tesla. Elon Musk tweeted out, they bought, they put like $1 billion into Bitcoin. What did the stock price do? The stock price went up. They put $1 billion into Bitcoin to allow people to use Bitcoin to pay for their vehicles. That's a positive fundamental catalyst that could bode well for the stock. So things like that you want to know. You want to know if there's a negative catalyst on a stock. If company reports earnings and they miss guidance, that could be potentially detrimental for a stock. And one thing I do recommend is if you buy a stock and they have earnings, if you're a trader, you do not want to hold into an earnings unless you know, and there are things you can look for unless you know that there's a probability that the price will go up after the earnings. But generally, I don't like holding stocks until earnings. And then overall, last thing for proper preparation prevents poor performance. Is the overall trend bullish or bearish? Are you trading with the trend? Are you a buyer or a seller? If you're a buyer, you want the trend to be moving higher. You don't want to be a buyer and the trend's moving lower, because you're doing what they call counter trend trading. You're trading against the trend. And when you do that, that's more of in my opinion, a scalping technique, because you're having small swings into the downside of a trend. If the trend's moving down, you essentially have stock price, you're essentially buying into that downward movement. You don't want to do that. So you want to know if the trend is bullish or bearish. Okay, next, hard work. And this is key. Managing your trades. Okay. What do I mean by managing your trade? If you get into a trade, okay, don't get into a trade and then go off and go cook something to eat. Or, go to the bathroom. You want to do that stuff before you get into a trade. Because I can tell you horror stories where people, were looking to get into a trade, or they got into a trade and they went to go do something. Heck, even case in point, I don't think I've ever walked away from my computer if I'm in a trade. And there's I have, but there's certain points of the day where you can do that. But even when I've done that, it's been for maybe a couple minutes. That's that. And it was at a point where, the market, goes through phases. So it was at a point where the stock wasn't as volatile. So, give or take, that's a huge part of managing your trade. If you get into a trade, do not go off and do other things. Don't look at don't be looking at YouTube. Don't be looking at TV. Don't be texting your friends. Cut all of that. Everybody knows when I'm trading, I don't answer my phone, period. So don't call me. Don't call me, don't text me during the day if I'm trading. Let's see, what else? Watching price action at key support and resistance levels. This is key. This is a part of managing a trade as well. If you're in a trade and let's use the example, okay, of stock X. Stock X is you bought it at $10. You wanted to go to $10.50. It gets to $10.50. Okay, that's a key resistance level. Well, let's back up. It gets to $10.25. That's a key resistance level before it gets to $10.50. What is it doing? Does price get rejected from that area? And there's ways to look at that. Does price hover around $10.25? Meaning, does it fall back? Does it get to $10.25 and fall back to $10.20, $10.15, and then go back up to $10.25? Does it do that a couple of times? That's part of watching price action. Case in point on the reverse side. If you are buying a stock at $10 and the stock dips down to $9.75, is that support? Is that support level holding up? Does price bounce off of that level? Those are all part of managing your trade. When price is at key levels, you need to know what to do. You need to understand what you're looking at, okay, and know if you need to sell the stock for a loss if it's below support, or sell it at a profit if it's above. Hello, hello, hello. Can you hear me? Can you hear me now? Can you hear me now? Hello, hello, hello. Can you hear me? You all can hear me now, right? Can you hear me now? Can you hear me now? Yes? Can you hear me now? Hello, hello, hello. Can you hear me? You all can hear me now, right? All right. We're back on track. Let me hear up and get through this before my sound goes out again. Can you hear me now? Let's see. Yes. Being patient. What does that mean? Being patient. So, trading is a game of patience, and you want to maintain. You want to be patient in trading because we're back on track. If you're in a trade, let me hear up and get through this before my sound goes out again. And you're managing the trade properly. Let's see. Okay. Yes. Being patient. You're managing the trade properly, right? and price goes from $10 to $10.50. And you're like, oh, okay, well, price, well, let me exit the trade. But if you be patient and manage to see if, okay, is price having, a hard time getting past 1050, then, being patient can simply keep you in the trade a little bit longer than maybe you were anticipating, right? So that's big with trading as well. Or if you're in a stock and it's moving sideways, and generally when a stock is moving sideways, it's going through what they call a consolidation phase. That's basically saying that the big banks, institutions are accumulating shares for its next move, either up or down. And I've seen plenty of times where you're in a trade and the stock just stays sideways for 30 to 40 minutes, and then the next 5 minutes later the stock moves another 15%. So that's part of being patient. You want to be a patient trader. You don't want to be in a hurry when you're trading. Patient traders get rich, and that's a fact. Patient traders, get rich. When you're in a trade, you want to maximize the amount of money that you can make. And when you do that, maximizing the amount of money that you can make, you have to be patient. One thing also I would say is don't chase stocks. Don't chase stock price. Because what happens for most people, and that's what they call fear of missing out. It's an acronym that's widely used in the trading community and the investing community called FOMO, fear of missing out. And simply put, when price moves higher and higher and higher, and price continues to go higher, people tend to chase it. Because if they want to get in, let's use the example we've been using before. Price moves from $10 to $10.15, $10.20. Hey, guess what? You've missed that move. Do not chase it. Because let's just say the stock has resistance at 1025. Well, if you get in at 1015, just to ride it to 1025, that's 10 cents. You're putting yourself at risk, because when you chase stocks, you mismanage what you call your risk to reward ratio. So be patient, okay? If price moves too far away from where you want to get in at, just let it go. Okay, move on. Live to fight another day. The less patient you are, the more your winning percentage goes down. So that goes back into chasing a stock. If you chase it up, you buy it at 10.15 and it goes to 10.25, and then all of a sudden it reverses from 10.25 back down to 10.10. I've seen it do that before. I've seen stocks do that before in a hurry, in a blink of an eye. Now you are 10 cents in the hole, or 5 cents in the hole, and then price continues to go down and down and down and down. Therefore, you're losing money. That's why you don't want to chase them. Lastly, quality versus quantity. Take less trades. The less you trade, the more profitable you'll be. This is something I had to learn for myself. Okay. Number 4, having a detailed trading plan. What does that mean? Having a detailed trading plan. Okay, have a plan for when the stock goes in your favor. What does that mean? You get in at 10, you plan for it to go to 10.50, okay, and you manage it properly. then that's having a trading plan. That's, and it kind of reiterates what I talked about in managing the trade, where if price gets to 10, 15, 10, 20, 10, 25, things like that, you see a major area of resistance at 10.25, managing the trade to see how price reacts to that level. Okay, that's a part of your plan. That's a part of planning for what the stock price will do if it goes in your favor. Now the flip side of that is planning for what the stock price will do if the stock goes against you, if price goes against you. You get in at $10, and I'm gonna just say this. This is the number one thing traders want to focus on. You want to focus on risk first, meaning you want to focus on how much you're willing to let the stock price go against you, aka how much you're willing to lose on the trade. That should be your number one priority going into any trade. How much money am I willing to lose on this trade? You want to focus on, because risk management will keep you in the game. Okay? So, first, focus on how much you're willing to risk. And that goes into planning how much, planning how far you're willing to let a stock go against you. I recommend, for anybody who's trading, I recommend that if you're trading stocks, you never want to let a price go more than 7 to 10% against you. If a price goes more than 7 to 10% against you, and the reason I use 10 because some stocks are very volatile, meaning the price fluctuates in a wide range. So if you're in a stock that fluctuates like that, then you definitely can have, if you know what you're doing, more in particular, if you know what you're doing, you can let price kind of whipsaw, and you can have a wider percentage that you're willing to risk. But for the average trader, my recommendation is anywhere from 5 to 7%. So, and lastly put, for having a trading plan, having a trading plan keeps you consistent. It keeps you consistently profitable, even when you're losing money. Because if you have a drawdown of 3 to 7% on a stock every 4 or 5 trades, so every fourth trade you have a drawdown of 7%. If you have 3 previous trades that you made 10% each on each trade, then you have less of a drawdown, and that keeps you going. And that's the name of the game. You want to lose more money than you make in the markets when you're trading. Number 5, discipline. This is key. Discipline, sticking to your trading plan. You definitely want to stick to your trading plan, because if you don't stick to your trading plan, that's when you lose money. I can go back to any trade that I've had in the past where I've didn't make as much as I set out to make. I had a trade like that last week. I had a trade like that where I made roughly about $7,500. Could have made more. However, I was willing to let the price fluctuate back and forth a little bit more, but I could have made more than that. So had I stuck to my initial plan, I could have made more. I could have made 100% return on that. But case in point, stick to your plan. So that basically, I was said, for my trade, it was more like, okay, I'm willing to accept 50% return on my money than 100% return on my money, because the stock had a lot of potential for a lot more upside. Had the market not been down that day, I would have made more money. The market can stop momentum in a stock more than anything. So discipline, sticking to your trading plan. Okay. What's your plan if stock hits your exit price? Do you want to hold it? Do you want to see if it'll run higher? Okay, that's all part of your plan, remaining disciplined. Okay. Let's see here. The next would be communication. Now, what does that mean? Communication is simply this. Trading, you want to be around a community of traders because, you know, no one man is an island. No one person is the gatekeeper of all knowledge. So it's good to have someone else that you can bounce ideas off of. It's good to see what other people are thinking about the same stock. And so one thing I recommend people who are trading is sign up for a site called StockTwits. It's an app that you can download to your phone. It's also you can view it on a PC, but more importantly, it's a community of traders. And any stock that's traded on, or most stocks that are traded on the stock market, there are other people that are trading those stocks, and you can go on StockTwits and see what all of those other traders are saying. Because a lot of times they'll give you great information. I've followed people on StockTwits that I've gotten great information from, that I've gotten referrals to other stocks that were good stocks to also trade once I did my research on them. So that's one of the things what I mean by community, being a part of a community or communication. You want to be a part of a community of traders that can help you. And then two, if you have people that can mentor you in trading. I'm currently mentoring a relative of mine in trading, and you know, every morning he hits me up. He's like, hey cuz, you know, what do you think about this stock? What do you think about that stock? And I give him my ideas, and more times than not, they've helped him stay out of bad trades. They've helped him make money when he's in a bad trade. It's helped him make money, you know, for a good trade. So you wanna get around people who can mentor you as well. And I do mentoring as well. Like I said, I mentor a cousin of mine. If anyone wants mentoring, just reach out to me, DM me. We can go from there. We can talk about price and whatnot. Well, I put the comment in the websites. Well, I put the website in the comments. Yeah. So let's see. StockTwits.com. StockTwits.com is the site. Let's see. Is the site that is good for being a part of a community of traders. So, StockTwits.com. You definitely want to, like I said, sign up for that site. It's free. You don't have to pay anything. There's no subscription fee or anything like that. And you can follow, like I say, most stocks that are traded are on StockTwits, and other people are trading those stocks. So, let's see here. I cover trading as a team sport. What community you can go to, having a mentor. Okay. Last but not least, this is important as well. Replaying your important trades. What do I mean by that? Go over the trades that you made money in, because those, if you duplicate if you find more stocks that you can duplicate what you did in the stocks that you made money, that what you're doing is essentially you are feeding into your strengths. Okay, if you trade a particular pattern very well, you want to capitalize on that. Go back to your past trades, see what that pattern looks like, then look for that pattern in future trades. Okay, that's key. Replaying your trades. It's like, I equate it to watching film. If anybody who's ever played sports, let's just look at basketball. Okay. A lot of times basketball players, when they have film sessions, they go back over what they did well during particular games, and then they go over what they didn't do well during particular games. And what they didn't do well, they learn from. What they did do well, they learn from as well. And what they did do well, they do more of that. And what they didn't do well, they do less of that. So that's why it's important to go over your past trades to see what you did well, to see what you didn't do well, because that makes you become a better trader. And that's the biggest thing in trading. You want to become, every day you want to be becoming better at trading, day in and day out. So you want to become better at trading, because the better you become at trading, okay, the more money you make. The more money you make, the happier you'll be. Okay. Let's see here. I said build into your strengths. Talked about that. Use your best trades to make more trades like those. Talked about that. So that's it. That's it. Essentially, these are the 7 basic principles every trader should know for a winning trade. I'll summarize those again. Number 1, proper preparation prevents poor performance. Make sure you're properly prepared when you go into a stock to trade. Hard work. Okay? When you're trading, are you working hard? Are you managing your trades properly? That's mentally taxing. And if you're doing that and you're being successful at that, you're putting in the work. Okay, to be successful. Number 3, being patient. You have to be patient. Trading is a game of patience. Traders get paid to be patient. They don't get paid to be in a hurry. Because when you're in a hurry, when traders are in a hurry, you make mistakes. When you make mistakes, you lose money, and no one wants to do that. Having a detailed trading plan. Okay, any stock you trade, you want to have a game plan for what you're looking to get out of it. Okay, you want to know what price you're getting in at, what price you're getting out at, and what happens when, what your reaction will be when price reaches certain support and resistance levels. Okay. Number 5, remain disciplined. You want to remain disciplined. Stick to your trading plan. Okay, that's why you have it, because discipline will keep you in the game. If you're not disciplined, then you'll fail. Number 6, communication. If you have an idea about a trade or something, run it by somebody that you respect, that you believe, that you respect their opinion. Also, like I talked about, the trading community. You want to be a part of a trading community where you can view, what other people are saying about trades. Or not trades, what other people are saying about whatever stock you're in. And then number 7, replaying your important trades. After every trade, you want to go back over, what you did well, what you didn't do well. I do that every day. Well, not every day, but every trade I have, I go through, what did I do well? What did I miss? Okay, when price got to this point, Why did I get out quick? Oh, okay. I got out quick because I didn't realize this. Doing things like that help fine tune and tweak your trading. And that's what you want to do. That's why you want to go back over, what you did well, your successful trades and your unsuccessful trades. It's all a learning process. Every trade, every day, you want to become a better trader. So that's it. That's all I got. That's all I got. And you want to go back. I hope it was valuable information for you. If you missed anything, go back and rewatch it. I apologize for the technical difficulties again. But anytime you're starting up anything new, there are going to be problems that you got to work through, and the important thing is to not quit, not give up. So that's my 2 cents on that. And let's see here. So if there are no more questions, if no one has any questions about anything, no further questions, I want to wish everyone a good night. I want to thank everybody for tuning in, those who did. Those who didn't, tune in or who missed it, go back on my page. You can rewatch the broadcast. I'll have it up. And I will say to everyone, have a good night, people.